One thing I think you're going to hear about from all of the speakers this evening are about avoiding being underinsured. And so I have a couple asks I'm going to make of everyone, things you could do just to get started on this path. And the first one is about looking at your homeowner's insurance limits and trying to determine if you have enough coverage. It's important, that everyone take a look at their insurance coverage. It could mean, that you're going to pay a little more in premium. I think you'll find it reassuring to know that you have the right coverage should you ever need it. And so what you need to do is check around in your region and see what construction costs are like. I will say that when we were helping people who had claims in Napa and Sonoma, there are people whose the limits they had reflected what was a $200 per square foot construction cost. That might have sufficed 20 years ago, but their limits were purely out of sync with the reality. You really need to make sure, and even the 350 I show here on my example slide is probably not nearly enough for many homes in Marin County.
So how do you prevent underinsurance? The demand surge, as we talked about, can increase the cost of materials and labors. And we certainly saw that in 2017 after the Tubbs fire in Santa Rosa, which is, probably the closest one we've had recently to Marin County. So when you're looking at your coverage A and thinking, my house is 3,000 square feet, it now is average $400 to $500 a square foot. That's kind of your basic calculation. There are extra coverages on your policy, and these are very important, and they'll be listed on your renewal. So say your coverage A, I'm going to do easy math here, is 500,000. If you have an extended replacement cost coverage of 20%, then you're going to get another $100,000 if the demand surge has increased the cost of materials and labors. And will my policy replace all my belongings? Joel pointed that as well, that your contents are usually a percentage of coverage A. You can get 25, 50%, or 75%. So, when I was at the height of buying, I might want a lot of coverage. When I downsize, when I'm going to travel more or retire, I may want less. So look at those carefully and get what you actually need.
You have a very major asset to protect. So really, you do need to pay more attention to your insurance than you thought you did. So even if your agent has said, oh, you're fine, chances are that you may not be. And that's, some of these questions that have come in with people saying, well, I asked my insurer, I said I wanted more, and they said they wouldn't sell me more. That is some of the reality right now on the ground. Insurers are definitely nervous about California. They have seen, we've had some bad years of wildfires. And so they are looking to limit the amount of risk. So you do have to be assertive in making sure that you are insuring your dwelling to value. If you do get a non-renewal notice, you have 75 days to shop. We encourage you to take every one of those days if you need them. So don't sit around thinking, oh my God, it is scary. But you always do have the FAIR plan. That's going to be there for you. It's not perfect, but it is there. So you need to, and pretty much, you're not going to be out there without. It's more a question of whether you'll be able to afford it. And that's a serious challenge, of course, for a lot of people. We are working to get standards in place so that when you take steps to make your home less likely to be damaged or burned, your insurer will reward you by either keeping you as a customer or giving you a better rate. But before we get back to that, just a few more points I want to hammer home that you've already heard. Very easy to inventory your assets. Take your cell phone, put the camera, the video setting, walk around talking as you go and narrate. Open drawers, photograph what's in the drawers, and then send that video to a safe place where you'll be able to find it if, God forbid, you ever need it.